Bitcoin is down by over 20% over the course of just a couple of weeks. Since its peak of $69,000 in November 2021, the price kept declining. Of course, everyone is expecting it to shoot again as it did in July 2021, but that doesn't seem to be happening in the coming future because the Fed has raised the interest rates by half a percentage point to a range of 0.75% to 1% after a smaller rise in March. It's the biggest interest rate rise in 22 years. Bitcoin isn't alone. Literally every crypto out there is down. Ethereum is also down by over 20%. Even if we look at the stock market, it's not all sunshine and rainbows. Some stocks like Netflix, as we have seen, are so down that even the world's biggest and most stable tech company is down by over 14% at the time of this script. If you think about it, Bitcoin isn't just down by over 20%. Compared to its peak of $69,000, it is literally down by over 50% since then. And as the price keeps declining, more and more investors would be willing to sell off and get out before it's too late, which is causing the price to tank even further. Now the question is, will the price of Bitcoin keep falling? Will it collapse by the end of the year? And how did day traders lose all of the money they have made in the last 2 years just in 1 week? We will answer all of these questions and many more, but before we do that, give this video a thumbs up, and here is a little disclaimer. This is not financial advice, and everything that's said in this video is for educational and entertainment purposes. The stock market is bleeding. Everything from tech stocks to crypto is down. A lot of people lost fortunes. That's why rich people often diversify their investments. 2/3 of billionaires, for example, allocate between 10 and 30% of their overall portfolio to art. That's not by accident. This asset class outpaced the S&P 500 by 164% in the last 26 years and has seen almost triple the appreciation of real estate. The total wealth held in art is estimated to be worth $1.7 trillion, and Deloitte projects it to grow by $900 billion by 2026. But art is expensive. They can cost hundreds of millions of dollars. So the question is, how do you take advantage out of this opportunity? That's where Masterworks comes into the picture, today's video sponsor. Masterworks is the first platform that is democratizing the art market by allowing anyone to buy and sell fractional shares in high-value works of art by artists such as Picasso, Banksy, and Monet that were accessible only to the super wealthy. Over 400,000 people have joined the platform. If you want to take advantage and invest in some fine art, there is a waitlist. But you can skip that waitlist and immediately start investing by clicking my link in the description. When Satoshi Nakamoto created Bitcoin right after the 2008 crash, its true purpose was to decentralize the financial system, since the fact that the entire system was in the hands of a few major banks caused the Great Recession in the first place. If there were more checks and balances on these greedy bankers, there wouldn't be such a crisis in the first place. That's of course a case to be debated, but the idea behind crypto is really genius. The only problem is that governments really love controlling the inflow and outflow of money, since that's the only way to fill the treasury to sustain the country. That is why it was initially popular in the black market, where people traded illegal goods. However, back in 2015 and 16, more and more people realized the potential of the crypto, which led its price to shoot to the moon. Within a span of a single year, the price of Bitcoin rose by over 2,000%, from less than $1,000 to almost $20,000 before it crashed. That's when the world got excited about Bitcoin and hundreds of new coins emerged. But what was also happening is that Bitcoin started shifting from being a currency into an asset class of its own. Bitcoin is no longer just a medium of exchange, but rather a digital asset like gold whose price fluctuates, and people buy it not because they want to use it as a currency, but rather to store wealth or profit from trading it. In fact, now we have USDT, cryptocurrencies that are tied to dollar so that people can use them as a currency. The only question is, how is that different from using real dollars? In fact, most crypto is traded on platforms such as Binance or Coinbase, which are getting regulated more and more with each passing day. And that raises the question, how crypto is different from traditional banks? The only difference is probably that transferring money has become much faster. But the fact that financial institutions are pretty much in control creates the very problem that crypto is supposed to solve. Just because our money is mostly controlled by banks isn't necessarily a bad idea, because most people aren't necessarily good with money either. Most people are financially illiterate. That's why there are so many scams in the world of crypto. I mean, people made millions of dollars by creating a Squid Game coin when it was in its peak. People threw their savings into an asset that they have no idea where it came from, nor had any real information about it. However, they hope that this is their opportunity to finally make the millions they always hoped for. Little did they know that it was just another scam that was waiting for them at the end of the tunnel. That's peanuts if you compare that to how much money was stolen in 2021. According to Chainalysis, scammers took home a record of $14 billion in cryptocurrency in 2021, thanks in large part to the rise of decentralized finance platforms. Think about that number for a moment, $14 billion. Now you can see where most of the money is made in the world of crypto. I know that I'm going to get a lot of hate for saying this, but it happened whether you like it or not. A huge chunk of that money was stolen through a relatively new but very popular type of scheme known as a rug pull, in which developers built what appeared to be legitimate cryptocurrency projects before ultimately taking investors' money and disappearing for good. Even the police wouldn't help you, because tracking these people isn't a joke. Remember the case with BitConnect where they stole over $1 billion and are still not found? That's why sometimes we need financial institutions to regulate the market and prevent such scams, even though they might sometimes misuse their authority. Again, I'm not trying to defend the greedy banks, they're not saints, but we will leave that for another video. $14 billion is nothing compared to how much people made in the last 2 years. The price of Bitcoin increased from around $10,000 to almost $69,000. That is literally hundreds of billions of dollars worth of value. However, the boom is over and is very unlikely that it will come back in the coming future, since the Fed raised rates by 0.5%. There is always a period of boom and slumps. The period of cheap money is over, and next couple of years will be a bit harsh, not only for crypto, but for the entire market. I mean, look at the tech stocks such as PayPal. It didn't just lose everything that it gained during the pandemic, but it's down by 40% if you compare it to where it has been before March 2020 crash. The stock lost 75% of its value since its peak. Netflix, Meta, you name it, everyone is down. All of them have plummeted dramatically. When the Fed raises rates, volatile assets suffer first, since investors prefer to store their wealth somewhere safe. That is why we have news such as this. Day trader army loses all the money it made in meme stock era. That doesn't apply just to stocks, but also to crypto. Take the most famous crypto meme, Dogecoin. It is down by over 82%. The question is, will the market keep declining? Well, as long as people are selling off and closing their positions, the answer is yes. But sooner or later, that is going to end and the market will stabilize, and we'll get rid of companies that aren't really adding any real value to the market, but are just there just because they sound cool. I know that it's painful to see how your entire portfolio is declining. Take the founder of Coinbase, Brian Armstrong, whose net worth tanked from around $13 billion to as little as $2 billion. The platform showed disappointing earnings that some people are talking about bankruptcy. And the worst part about it is that in the event the crypto exchange goes bankrupt, Coinbase says that its users might lose all the crypto they stored in their accounts too, which is making the situation even worse. I wouldn't be surprised if it tanks a bit farther, but personally, I'm not selling my cryptos since I'm not a trader and more of a long-term investor. That is why short-term drops don't really bother me much. Thanks for watching, and I will see you in the next one.